Hey everybody, my name is Matthew Sambanis. I'm a certified public accountant. My firm is based in Long Island, New York, and in today's video we are going to discuss the alien economy, the retail bloodbath, the crash for the demand in clothing in particular, and a litany of other good stuff going on. So before we dive in, by the way, please be sure to like, comment, and subscribe. And I do read the comments. In my last video, which got a lot of views and a lot of comments, there seemed to be a little bit of a recurrent theme. A lot of people enjoyed it, thankfully. And a few people pointed out that apparently I went off on a little bit too long of a tangent. And perhaps I shouldn't call companies or people names, which I really don't think I did it that much, but I saw a few comments that kind of related to that, so I'm going to do my best to tone that down. And if you do leave a comment to this video, I'll be sure to reply. So I thank you in advance for your time, and I hope that you find this helpful. So first article today is Under Armour approves restructuring, warns of collapse in clothing demand as buyback authorized to save plunging stock. So long story short, Under Armour's board, number one is their stock is down to near all-time lows. I think it's $7 or $8, which is what it was about 10 years ago. And the company's obviously grown substantially, but the growth isn't there anymore. The revenue is there. So, if you are willing to take a risk on a, quote, value stock, this might be it for you. Again, Nike's turned around. Foot Locker seems to be turning around. And there's plenty of other apparel companies that have staged huge turnarounds. And I do think Under Armour is a good brand and it's well known. I personally don't own any stock in it. I have owned stock in it and I've bought options on it, but at this point in time, I don't have any interest in it. I do own a bunch of shares in On Holdings, which is that new shoe company. I personally don't own the shoes, but I know people who have 8, 9, 10 pairs of them, and I see how their revenue is growing like wildfire. So, just an idea. Again, I'm just some dude on the internet, and I just share my opinions and my thoughts. Anyway, Under Armour basically is they set aside $90 million, $70 million to $90 million, up to $50 million in cash-related charges consisting of approximately $15 million in employee severance and benefit costs. That's astronomical, and $35 million related to various transformational initiatives. And up to $40 million in non-cash charges comprised of approximately $7 million in employee severance and benefit costs and $33 million in facility, software, and other asset-related charges and impairments. So in other words, the latter part's a little easier to understand. They went out, they bought, let's say, another company for, an inflated value of $10 million, for example, and now that, it's only worth $5 million, they need to take an asset impairment and, reduce that asset from $10 million down to $5 million and take a loss. And the employee severance is not good because that means they plan on firing people. So if you're an employee and you work for Under Armour, you might want to start to work somewhere else. Anyway, Plank commented on the outlook. Kevin Plank is the CEO of Under Armour. Due to a confluence of factors, including lower wholesale channel demand and inconsistent execution across our business, we are seizing this critical moment to make proactive decisions to build a premium position for a brand, which will pressure our top and bottom line in the near term. Over the next 18 months, there is significant opportunity to reconstitute Under Armour's brand strength through achieving more by doing less and focusing on our core fundamentals, driving demand through better products and storytelling, running smarter plays like simplifying our operating model and elevating our consumer experience. Basically, he sees what's going on. He's a smart guy. He's a multi-billionaire, and they're taking it on the chin. That to me is actually a good thing. I think it's a vote of confidence. But at the end of the day, when Under Armour warns of collapsing clothing demand as buybacks authorized to save plunging stock, whatever. I do also, to bring up another point, actually, I was at the mall over this past weekend and I went through Dick's and I saw some Under Armour shorts, just literally shorts, basic, nothing fancy, $40. That's egregious, especially when you can go to Marshall's or TJ Maxx, where I like to shop, and it's $10-15 there. That's my flavor. U.S. retail bloodbath continues as store closures hit 2,600 so far this year. up 2.5% more than the same period of 2023. Discount stores and drugstores accounted for most closures. I wonder how many of these closures are due to massive theft rings. But big names including Macy's, Walmart, Walgreens, Foot Locker, and 7-Eleven have all said they are closing shops. But discount stores like Family Dollar and bankrupt 99 cents only have been worse hit, as a drugstore like CVS and Rite Aid, who have also been taking it on the chin. So, listen, if you have a medical company, or essentially what CVS is, a medical company, they're selling medicine and they have a drugstore and they're taking a beating on the chin, that's not a good sign. The other thing I'd also like to point out is that CVS is also egregiously overpriced for their product. And I'm sure, like myself, there's millions and millions of other Americans who are sick and tired of taking it on the chin and paying for overpriced stuff, especially when they can go right down the block to Target or Walmart and get it for a third cheaper, which again, Walmart and Target have also been taking it on the chin, which we'll cover that in a little bit. But moving along, unsold Teslas pile up in mall parking lots, big discounts likely. So people who own Teslas are generally fanatical about them, but at some point, they've reduced their prices dramatically. They've upset people who had just bought their Teslas. On the flip side, if the prices go up, you can't, you really can't complain if it goes both ways. But regardless, Tesla cranking out cars, but to where? Parking lot full of Tesla vehicles are becoming impossible to ignore as the electric automaker seemingly can't sell enough cars and trucks to match its rate of production. And, internationally, Germany, they've been taking it a beating there, I believe, and they're having issues in China. And Joe Biden just enacted, I think 25% or 100% tariffs on EV cars that we import from China. So I guess it makes a great headline, but number one, a tariff, you and I pay for it, right? At the end of the day, tariffs are bad. Unfortunately, most American people or American consumers don't know that you're actually paying for the tariff. So that's part one. And part two is, China might retaliate against Tesla for what Joe Biden did. But there's not to my knowledge, please tell me if I'm wrong, if there's Chinese EVs in the United States. Anyway, please be sure to like, comment, and subscribe. And moving along, ex-CEO Howard Schultz recipe for Starbucks, resurgence after missed earnings. So even Starbucks with their $5, $6, $7 lattes, again, the same content, different concept, right? When you're going to Rite Aid, you're going to Gucci, you're going to Lululemon, and you're buying the most overpriced stuff, especially when you can buy it somewhere else, you're taking it on the chin. And there are growing companies in the coffee industry, case in point, Dutch Bros, which I own. Some people might call it a lot of stock, some people might call it a little bit of stock, but I own enough stock in Dutch Bros, which is a growing coffee chain. They're big on the West Coast, they're big down south, and they're growing like wildfire. But Starbucks, with their overpriced stuff and their same old over and over, they're taking a beating. And it does get to a point where you say enough is enough. I'm not going to pay for that $7 latte anymore. And moving along, Lululemon, right? Great company, great growth stock, been having excellent quarters, for years now. Absolutely crushed. Lululemon shares tumble on cautious consumer outlook. The Lululemon stock plunged in pre-market trading as the company's forecast for first quarter net revenue fell short of Wall Street's expectations. And this has been a theme in retail, which is what this video is about. Other news, luxury meltdown. Karen's Gucci warning, sending shares crashing, most since 1992. So, again, Gucci. So this is, it's not just the Walmart shoppers and the Target shoppers. It's also Lululemon. It's also Gucci. It's also Tesla. Every socioeconomic class that we have in America is taking it on the chin right now, unless you're, 100 millionaire or a decamillionaire or whatever the case may be. And even at that, when you're that rich, you're still, well, let me rephrase that. Some are and some aren't. I'd like to think that if I was a multi-billionaire, the thought of buying a $2,000 t-shirt or a $200 t-shirt would just make me want to vomit as much as it makes me want to vomit right now. Just do something better with your money. And if you're going to go waste it like that, then give it away to somebody that would appreciate it. Or in Well, again, when you're that rich, you don't need to go invest it because you have plenty of other money invested. Anyway, average U.S. vehicle hits 12.6 years as inflation takes toll. Another headline here. And what does that mean? That new cars and used cars aren't really selling as much. And why is that due to? Well, I guess everybody was going to go buy a new car during COVID who paid $20,000, $30,000 over MSRP, some a lot higher. Can't afford to buy it anymore. And the other issue, and never mind the repo crisis that's going on, which we could do that in another video. But you have, basically people, interest rates aren't 2-3% anymore. They're 8, 9, 10% to go finance a car. It's absolutely crazy. And the other issue that we have is interest rates are still too low technically. I'm going to do another follow-up video to this sooner than later. But what's the outcome here, right? So what does this all lead to? It leads to prices have been artificially and not, I think it's a mix of greedflation, and I think it's a mix of inflation. People had all this free money, and when you have all this free money, people don't care when you spend it versus when you have to go out and work for it, right? This economy of ours in the U.S. is consumer-based, more and more and more. Let's keep up with the Joneses. I'm better than you, blah, blah, blah. I have a Tesla, I have a Porsche. Not me personally. Well, I do have a Porsche, but again, it's one person trying to outdo the next person, and it's completely unnecessary. And just a disclaimer, my Porsche is a few years older and has low mileage. I don't even drive it that much. But what does this all lead to? It leads to Walmart, Target, and other companies unleash price cut and tsunami as working poor hit brick wall. And a lot of what's happened is a lot of people who used to go shopping at, say, Trader Joe's or Whole Foods are now shopping for food at Target, at Walmart, as upper middle class goes to places that they might not have gone to save money, right? If your electric bill, your utility bill, your insurance bill went up 20, 30% or even 5 or 10%, your food bill is absolutely through the roof. You have to find a way to make ends meet, especially if you're on a fixed income, or if you're making $100,000 a year, 150 or 200,000 a year, or if you're married and you're making 50,000 and your husband or wife is making 50,000. Then you're at 100,000. But again, you're capped, barring a raise, unless you go out and set up a side hustle and make more money to bring it in. So there's choices, right? When you have money or you have money issues, you either have one or two types of money issues. The first one is too much money. That's what we want to strive for, unless you're a monk or a Buddhist, and God bless if that's the case. And then you have the case of not enough money. So what do? Well, then you either need to cut expenses, or you need to increase your earning capacity and earn more money, or you need to do both. If you're shrewd, you do both. But at the end of the day, Walmart and Target clearly realized that they probably got a little too greedy. They can reduce their prices and they can still make money. And instead of making it up for it in quality, they can make up for it in quantity. And I believe, as a capitalist, that making up for money in quantity is the way to go versus quality, for the most part. There's certain exceptions to that rule. I could go off on a side note about pricing out tax returns, but I'm not going to. Anyway, humming along here. Fast casual dining foot traffic plummets across New York, New Jersey as consumers crack. The cost of living squeeze is crushing low-income consumers so much that Goldman Sachs tops consumer trader Scott Feller recently pointed out that his desk is getting bearish on the consumer and our soft landing basket. Yeah, inflation is through the roof. I've been saying this since I started doing this about a year ago. And it's only going to get worse from here. Going back to Target shares tumble after retailer reports caution about weak consumer. And, humming along a little more, many Americans say they will never retire. I read an article the other day about how there was some 90-year-old veteran pushing shopping carts in 90 or 100-degree weather down in Georgia or something on Memorial Day. I mean, that's just completely sad and completely unfortunate. And B, he was interviewed, and God bless, somebody set up a GoFundMe for him, and there's over $200,000 there for him now. So I dislike to read just one bad article after another and not get into the solution. And what is the solution? Well, A, make as much money as possible. B, keep your costs as low as possible. Tithe or give your money or donate your money as long as you can afford it. Better yourself, work harder. Look for other ways to make more money, or, whether it's at your job, whether you're self-employed, or if you set up a side hustle or 2 or 3 side hustles, whatever the case may be, but better yourself, do the next right thing. If you have extra money to invest, invest in the stock market. If you don't know how to invest in the stock market, find a financial advisor, set up, if you have your money in the bank, maybe get a CD if you don't need the money anytime soon, or put it in a money market, whatever the case may be, but put your money to work for you. Again, I could go on either which way, but, unfortunately right now, the consumer in America is weak. The American economy is very weak. I don't care what the headlines say. They're wrong. If you're living in the real world, which I am, and I believe you are too if you're watching this, it's not really a pretty picture out there. So anyway, going back to what I was saying before, just do the next right thing, live in the solution, do the best you can. And I don't want to give vague generalities, but we'll also be filming more videos. And if you'd like me to do a video on anything in particular, leave a comment below and I absolutely will. So hope you have a great weekend and thanks so much. It's Friday.